All right, traders, welcome back to the channel. Today we're going to be going over 4 main things. We're going to go over the quick trades that we went over yesterday, just a quick review. We're going to go over the Fed minutes going on today. This was the big takeaway. There's 3 really big things we need to be looking at there. And then, of course, we're going to be the SP500 Nasdaq breakdown, how futures are moving, how you can look at from yesterday's data, looking at today's, and then going into tomorrow, and then trades you need to be looking at for tomorrow. And there's going to be volume buyer breakdown of that movement. And then, of course, the stocks on the watch list for tomorrow. We'll get you out of here. Like, subscribe, do what you got to do. Let's get to it. All right, so first thing we're going to do is take a quick look at the Nasdaq, and we're going to look at the S&P. But looking at this goes right into what the trades we were taking. We knew today was going to be a lot of chop, a lot of downside pressure, and that's really all you got. Just downside pressure, stagnating, holding that bottom line support. We mentioned that very bottom, and it did hold up to a T. You had this triple top going on, but you also started getting that volume around when the Fed minutes were coming on around 1 p.m. Central, and then you popped through, came back down, got more volume pushing back up. So what did we trade? This is what we did. Starting off this morning, we have Jay Ream. He went for the puts on Tesla out of the gate. He bought for about $20 a contract. Stop loss was 18. He had those. They ran to about 26. He ended up cutting around 26. The high of the day there was on 30.8. It ended up going actually deeper in the money there, so you almost doubled up, but we got out a little bit early there. And then for myself personally, I waited till we had that movement to the upside, and I traded Apple. I got the 172 calls, just weeklies, $1.24, $1.26 even. It ended up getting out slightly at 1.55. Let some run. They ended up going up 50%, so some of the others ran. Those moved really good. I tried to get some AMC puts in today. Yeah, I never trade them, so I was like, let me see what happens. Those ended up getting stopped out about like 7%. So all in all, pretty good day. Not too many trades. We did do very well on the day, and that's how we're trading going into tomorrow. So we're going to jump right into the Fed minutes, and this is going to be just a quick rundown. Now, I have 3 major things I am looking at personally. You can look, there's more information here, but these are the things that, in my opinion, are moving the market and how you're going to be looking going into the rest of the week, and kind of what you can expect from the Fed to keep saying over, the next few days or whatever. Now, they are going to be pretty in-depth, so you can look at this if you want. Again, I'll have the link down below if you want to check it out and read it for yourself, but these are what I took from it. So the first one is going to be right here. Participants generally agreed that the monthly caps of about $60 billion for Treasury securities and $35 billion for agency MBS would be likely appropriate. This is a raise. So basically they're starting the taper of $95 billion. That's where this is starting to go. This is pretty significant of what's happening here. This is higher than expected, which is quote unquote bad for the market. Participants also generally agreed that the caps could be phased in over a period of 3 months or modestly longer if the market conditions warrant. We're going to get into this very important what they said here and how they worded this, and I believe that's why you didn't see an immediate dump to new lows on the day, because of how they worded this, and they are watching what's going on globally. Now, number 2, and if you want to, you can actually quickly search with the Control F and then type in your major bullet points. So number 2 is going to be your 25-point basis hike that you had this last one. So we know we were getting this hike, and I was under the assumption that they were just ignoring Ukraine and Russia, which is kind of crazy, but that's why I was just kind of just ignoring it, because I thought the Fed was just ignoring it, and they weren't really making comments, and Powell even said in some of their meetings they didn't see a direct correlation. However, in the minutes, they definitely saw it. So it says, in light of the greater near-term uncertainty associated with Russia's invasion of Ukraine, they judged that a 25 basis point increase would be appropriate at this meeting. Many participants noted that 1 or more 50 basis point increases in the target range could be appropriate at future meetings, particularly if inflation pressures remained elevated or intensified. Now, this is where things get interesting. So you can see that they are doing the previous of the 95 taper, and then they're extending that over time, kind of phasing it in, going there. That's really big. And then this is obviously the only reason why I can suspect why they are being so generous with that. Now, going into the end, it gets even further. It's worth mentioning, as you really get into this, they are emphasizing a lot on what's happening with global tensions, specifically with commodity prices. So with regard to economic outlook, participants noted that the real GDP growth had slowed from its rapid pace in the fourth quarter of 2021. So in the end of 2021, the markets, if you know, you're just shooting up, going crazy. They slowed down, from like the basically beginning of December, and then you fired right back up and reached new highs, and you came back down, largely reflecting the weaker inventory investment, but consumption and business investment continued to rise solidly. This is just a very confusing statement what they say here. But what's going on is you're seeing consumption, and you're seeing basically a supply issue happening. You're seeing not just from COVID, because COVID slowed down. They've already said the Omicron variant is mild. It's not really effective. They kind of throw COVID out the window in this whole thing. And they're showing that this is heavily happening based on what's happening in Russia. And they don't spend too much time regarding the food issues, but I anticipate in going meetings, they will start talking about the food outlook as well. That's why you're seeing things like wheat continue to rise right now. So you're going to see right here, commodities more. You're going to see all through this disruptions going on with what's going on in Ukraine. And I just don't want to spend that much time there because we'll just spend too much time on this when we need to look at the charts. All right, so we're going to hop right into the indexes. We're going to look at the Nasdaq, S&P, and how they are moving. I'm going to go over the liquidity as well. Now, the first thing I want to talk about is going on with the Nasdaq. So we mentioned some key zones overnight, what we were looking for. Now, you can remember this was our key zone right here. We had that 750 range right here we were looking at, right? Overnight, that quickly got broken through. You can see about, what was that, 5 a.m. for me personally. So about 3 hours before market open, you started dropping below that range. And then boom, you come down even deeper. So market opens and you start to this tank, right? So opening up today, that's where you hit. You came back through all of our other supports and you come down to the bottom line, which kind of was those previous highs that we had going on there, roughly at the 14.45, and you held there very strong. So in Discord, that's what we're talking about all day long. And so once you actually start finding that bottom on the day, you just move sideways literally the rest and remainder of the trading day. So basically from 9 a.m. literally you had your last drop from market open 8:30 down to 9, and then boom, just sideways action all day long. Then as you get closer to the minutes, they started to rise back up. And the only thing you can say here is going back to the original statement that uncertainty is the worst thing for the market, and that's what you're getting. They just don't know what's going to be said, and you get your news, bad, good, whatever it may be, it pushes you back up just so you have some certainty of what's happening right now in the market. So looking at that, that's what started pushing up, and in my opinion, it was clear the risk to reward was better to the upside. You had all this volume pushing you down. You can see volume started stagnating here. Even with that push you had before the Fed minutes came out, you can see very low volume kicking in there. Volume started pushing you down. Buyer step back in right here, pushing you back up. So it was a little whipsaw of action, but you can see there was a lot better volume going on right there. Even going back to previous days, you can see, just look at all that volume pushing in today comparative to the last, what is that, 2.5 weeks roughly. So you're getting volume finally pushing back in, and people are starting to make up the decision. So again, this was a lot of day trades going on here. Going into the SPY, what's going on here? The exact same movement. It looks a little bit cleaner, but you can see you're holding that bottom roughly at 444.5 as well. Had a quick little wick slightly after the Fed minutes came up, and you got bought right back up. Again, volume absolutely outstanding as well. A little bit more on par with the volume they had previously, but you definitely stayed pretty high through the end of the day for that last hour of 2 hours of trading. Now going to the volume. Okay, so if you're new to the channel, this is going to be the confusing part. I try to wrap this up and explain as very quickly as possible. Basically, there's a heat map and shows you where buyers are just based on color coding, and this is what it is. It's a liquidity heat map. So you have your black, which is no volume, and then you have your red, which is the most volume, and then you have obviously on the side showing you where those levels are. So you can see one level stayed onto the sell side all day, that $4,500 marker on the ES, and you had that bottom marker at around 44.50. 44.50 literally held all day long. Absolute tank. You kept coming down, bouncing. And this to me was showing that buyers still were stepping in, and we're not going to let it go below that, which it just wasn't there for the put side opportunity. We mentioned yesterday when you broke that key level, you started just absolutely dumping. So here you bounced up, you came down, you bounced right there. You can see it actually started to break through, but then more buyers started to make new walls and you came back up. But right now it's important to notice there is no support down here. So if you start to drop in the after hours, it could get gross, but you need to be looking for that 44.25, but that's not important right now. Going to 4,500, that's where bulls got stopped out. You could not get above it. That sell wall just remained all day long. That's extremely concerning looking at tomorrow's price action and what I'm going to be looking at. Going back to Nasdaq. If I'm looking at any chart, Nasdaq is going to give me the best answers. Looking here, you can see one, you could not hold above VWAP, which is going to really tell you the overall trend that you're in right now. Sitting below it, you're bearish right now. You could not hold that median level there, which was that triple top that kind of sparked the bull run that you had for a little bit after the minutes. You actually ended up closing below it and below the 8 EMA, which in my opinion has you pushing down. Now, could this change in the after hours? Yes. I don't trade too much in the after hours. I don't trade futures in the after hours. I just sit on my hands, wait for market to reopen, things like that. So right now, I have us coming back down to retest the zone at 37, that's what I'd be looking for down here. You start to break this zone, things could get spicy. Yes, this is a major support. You can see that is a huge support, so I don't see it breaking it very easily, but from there, you're going to start pushing down to 14,227, 14,220. That's where I would be looking for your next level of support, roughly right there. And it's going to come down in a hurry. If you come through, you can see there's no real liquidity there. And we also mentioned, going back to ES, you can see there's no liquidity holding you up. So if you start to dump down and sellers start taking control, it's going to get nasty. So we need to have this on a swivel. And I'll have a morning update coming out as well. I'm going to start doing the morning updates as well, just to give you guys a better feel for the market as well. And just what I'm looking for. Those will be very short, sweet to the point, breaking down futures. Let's get into some stocks. Okay, so as we come into the stocks, it's going to be just things that I like to the upside. I'm not looking for puts right now. If you start breaking these lows, then you start looking for puts. So as for Nvidia, right? So if you come down here and you start breaking this local bottom right there at roughly 239, then you're looking to play it to the downside roughly to 220, whatever it may be down there. But right now I'm sticking with the bull trend based on how you've been moving lately and based on the volume that you've been getting. So Nvidia, I'm liking this out of the gate. I wanted it at close, but I stayed disciplined just based on where you held when it came over to the Nasdaq, and you just didn't hold the levels you needed to. So you're still making those higher lows at the end of the day. That is the good news, that you are trending to the upside. That is good, but you're also making a lower high as well right now. But you started to break that trend for a little bit, but you're still riding that trend. You need to see it come out and get back above VWAP, and most likely you started breaking 250 in a hurry, pushing back to try to fill that gap locally at 260. So I do like that. I'm looking at 260 calls. That was a hot trade in Discord. People were trading the 250s today from that bottom when I started to get into Apple, and those ended up doubling in value. It was actually a better trade than Apple. But at least it's our next trade, which is going to be, you guessed it, Apple. So Apple, we're looking at this key zone here. This has been a major level of resistance. Right now, from a technical standpoint, this is a put opportunity looking at it. Now, I'm obviously, again, I'm still looking for the upside push, because you can still see, what are you doing? You're making higher lows across the board. So look in there, you are making those higher lows. If you start to break these higher lows, I think you're looking for a double bottom at about 170.15. Breaking those, you could go down steeper locally to 168.5. That's where I'd be looking right there. So look in here. If you can continue to hold this level, I think you're going to start pushing back to that monthly level, about 174, maybe the weekly level at 174.5. I like what's going on here. And look at that volume again you were getting near the end of the day. Very, very promising, but that sell candle at the end of the day was not very good. Last one we're going to be looking at is going to be Tesla, and I know this is going to leave people with some mixed emotions. It's leaving me with some mixed emotions as I was looking here. I'm not looking for the upside pressure. I'm personally looking for that downside pressure. I think you're going to be breaking this level here. This is the only one that I'm even looking for downside. I've been a full bull as we've been looking, but looking at Tesla, I think the favor is to the downside. It just has to be. You're looking for that touch right back down to locally 10.15, and it could happen in a hurry. That's what Jay Ream was looking at this morning. Once you broke 10.50, he was an instant bear on the stock. You came down in a hurry, and you just absolutely got torn up. You saw decent volume, a little bit descending going on middle of the day, but you're seeing that volume still kind of descending and then breaking back up on the seller side of things. So I'd be targeting that 10.15 range, 10.20 as a conservative target, but you're looking at there, Tesla breaking below VWAP does not look good. What you're looking for entries at open, can you break below these higher lows? And then can you break below this double bottom? So if you're looking at one, you're looking at a very conservative type trade. One, getting in a hurry, tight stops, looking for that double bottom locally right there. From there, if you're trying to go for, hold a little bit longer, ride those bad boys out, you're looking to get that touch of that bottom around down there. And what you could do to maintain that risk is continuously move those stops to the downside. So if you start getting in profits, just move them down, move that stop, move the stop over and over. Just keep moving the stops as you're trending down to make sure you secure those profits. That's going to wrap the video up. If you got anything else, please like, subscribe, more videos coming out.